Bismillahirrahmanirrahim. Assalamualaikum and very good morning. Today, me and my group mate will present about financial ratio analysis for Top Glove Corporation Berhad and Karex Berhad, which are listed in Bursa Malaysia. Go to the first part, which is the background of the company. Top Glove Corporation Berhad is the world's largest manufacturer of gloves, established in 1991 in Malaysia. They have grown to hold 26% of the world market share for rubber gloves and export to over 2,000 customers in 195 countries worldwide. They operate in multiple countries including Malaysia, Thailand, Vietnam, China, USA, Germany and Brazil, and offer a diverse product line including gloves, face masks, dental dams, exercise bands and domestic goods. The company has been listed as Syariah compliant in the Bursa Malaysia. The second company, which is under non-Syariah compliant company, is Karex Berhad. Karex is a family firm founded in Johor, Malaysia in 1998 that specialized in the production of condoms and lubricants. Despite early challenges, the company continued to grow by increasing manufacturing capacity and entering new markets. They successfully listed on the main market of Bursa Malaysia Securities in 2013 and now operates in the US, UK, Malaysia and Thailand. However, the company's stock is not considered Syariah compliant due to not meeting criteria set by the Securities Commission. Move to the first analysis, which is common size analysis. Our group are using vertical analysis because it expressed in a percentage to make easier to understand the relationship between individual items on the net income. Besides, vertical analysis is suitable to compare between companies in the same sector. For the result that have been analyzed, percentage of gross profit for Top Glove Company had a fluctuating trend from 2017 to 2020 before had a rapid increase in 2021 with highest percentage of 67.86%. However, the percentage of gross profit for Karex Berhad decreased slightly from year to year until it reached 23.28%. Therefore, it shows that Top Glove Company has a higher percentage of revenue and gross profit compared to Karex Berhad. Let's move to the second analysis, which is liquidity ratio. First ratio is current ratio. Current ratio is a liquidity ratio that measures a company's ability to pay short-term obligation or those due within 1 year. The current ratio for Top Glove Company is 1.57, 1.11, 0.97, 2.01 and 1.98 from 2017 to 2021. As we can see, 2019 was slightly worse because the ratio was 0.97, which is less than 1. It indicates that Top Glove Company in 2019 does not have sufficient current assets to pay its current liabilities. This is because the total current liabilities is greater than the total current asset on that year. Other years, however, demonstrate an excellent current ratio. It shows downtrend for the current ratio because the amount of current assets keep decreasing until 2021. Each year's values are more than 1 according to the current ratio published by the Karex Berhad Company. Therefore, it can be said that Karex Company has sufficient money to pay any short-term debt obligation. In conclusion, Karex Berhad Company current ratio is better compared to Top Glove Company. It will be advised to investors to invest in Karex Berhad Company over Top Glove given that its higher current ratio. Move to the second ratio under liquidity, which is account receivable turnover ratio. For Top Glove Company, the trend is increasing from year to year and the highest number of the account receivable turnover is 16.89 in 2021. A high ratio of account receivable turnover is in 2021 might be a sign of effective receivable collections and a high percentage of reliable clients that pay their debts on time. Meanwhile, the trend for Karex Berhad is contradictory with Top Glove Company because it shows the decline in numbers starting from 2017. It shows a bad performance for Karex in collecting their debt. It can be seen 1.41 is the highest number of account receivable turnover in 2017. A low receivable turnover ratio might be due to a company having a poor collection process, bad credit policies, or customers that are not financially viable or creditworthy.
Okay, now the presentation will continue with the capital structure management. As we have learned, capital structure refers to the amount of debt or equity employed by the firm to fund its operation and finance its assets. There are two components that we choose, which are debt ratio and debt to equity ratio. The debt ratio is a measure of the company's long-term debt paying capabilities that relates to the percentage of assets financed by creditors. As we can see, the debt ratio trend shows a fluctuated trend through 5 years. The debt ratio of Top Glove Corporation Berhad in 2017 until 2021 is below 1, and the highest debt ratio is in 2018 and 2019, which is 0.55. It indicates a good sign to the financial condition of the company as the ratio is below 1, which means the company has relatively more asset than debts. For Karex Berhad, the trend of debt ratio going upward for the 5 years. According to the table above, the Karex Berhad debt ratio has been increasing from 2017 until 2021. With debt ratios, it can be shown that Karex Berhad was able to keep their debt ratio under control and perform well over the past 5 years because debt ratios under 1 and as viewed as ideal. Carrying too much debt could put the entire organization at risk if cash flow doesn't work out because debt interest must be paid regardless of economic performance. A company with a high amount of debt may have difficulty paying off maintaining dividend payment for investors. Similar to the debt ratio, debt to equity ratio is important in determining a company's ability to meet long-term debt obligations. The debt to equity ratio helps to determine how well creditors are protected in case insolvency. A good debt to equity ratio is around 1 to 1.5. A corporation may be in financial trouble and unable to pay its debt if the debt to equity ratio is too high. For Top Glove Corporation Berhad, the trend for debt to equity ratio fluctuated for 5 years. The optimal debt to equity ratio is in 2017, 2020, and 2021, with the ratio of 1.45, 1.27, and 1.41. These 3 years indicate that the shareholders' equity is higher than the total liabilities in that years. On the other hand, in 2018 and 2019 shows a higher debt to equity ratio, which is 3.68 and 3.98. It is clearly stated in the statement of financial position that the total of liability is higher than shareholders' equity in 2018 and 2019. From that, we can see that the high debt to equity ratio implies that the company borrows more to fund its expansion. For Karex Berhad, the trend of debt to equity ratio going upward for 5 years. According to the table above, Karex Berhad debt to equity ratio has been increasing from 2017 until 2021. It depicts that the firm is generally less risky because the ratio is less than 1. This is because the shareholders' equity is higher than total liabilities every year. A low debt to equity ratio shows a lower amount of financing by debt from lenders compared to the funding by equity by shareholders. The lower debt to equity ratio indicates that Karex Berhad is over-relying on shareholders' equity to finance their business. We move to the next part, which is assets management. Assets management ratio is a group of ratios that show how efficiently the company manages its assets to generate and maximize sales revenue. The asset turnover ratio assesses how much a business sales or revenue are in the comparison to the value of its assets. The efficiency with which a business uses its asset to produce income can be determined by looking at the asset turnover ratio. The higher the asset turnover ratio, the more efficient a company is at generating revenue from its assets. In contrast, a low asset turnover ratio for a corporation suggests that it is not effectively leveraging its asset to create sales. The following table indicates that the total asset turnover ratio for Top Glove Corporation Berhad. The trend for the total asset turnover ratio shows downwards until 2019 and upward trends for the next 2 years. The total asset turnover ratio for Top Glove Corporation Berhad during the period exceeded 1, except for 2019, which is 0.87, and in 2017, the ratio shows the highest, which is 1.85. Therefore, it may be determined that Top Glove Corporation has effectively employed its asset to generate income. Carex Berhad above shows the total asset turnover ratio, the trend of the total asset turnover ratio going slightly downward from the 5 years. It can be seen that the ratio for the Carex Berhad from 2017 until 2021 is below 1. It is because the company's assets are either overly deployed or not properly used to create sales, and Carex Berhad's proportion of asset exceeds its proportion of sales revenue. Non-current asset turnover ratio is the relationship between a company's net sales revenue and its entire non-current assets net book value. The table clearly shows that there is a non-current asset turnover ratio for Top Glove Corporation Berhad, the trend going downward in 2018 and go upward gradually until 2021. The ratio above 1 and show the good performance and efficiency in the company. In 2018, Top Glove Corporation Berhad is not utilizing its non-current asset optimally compared to the other years because it shows the lowest ratio among other years, which is 1.14. However, Top Glove Corporation Berhad exhibit a high ratio of non-current asset turnover in 2021, which is 3.01, and indicating that the corporation had utilized the assets to their fully potential. The above table indicates that the non-current asset turnover ratio for Carex Berhad, the trend going upward in 2018 and go downward gradually until 2021. Even though the trend is falling, the ratio is still over 1. The company is defined as to be productive if the ratio is greater than 1, which indicates that sales are greater than the entire amount of non-current assets. Lastly, the non-current assets turnover for Carex Berhad show the highest in 2018, which is 1.33, and the lowest in 2021, which is 1.10.
Profitability is the ability of a firm to generate earnings using information at a single point in time. Profitability ratio are a class of financial measurement that are used to evaluate a company's capacity to generate profits in relation to its revenue, operating costs, balance sheet assets, or shareholder equity over time. Profitability ratio can be divided into two, which are margin ratio and return ratios. From the margin ratio, we choose net profit margin ratio, while from the return ratio, we choose return on equity (ROE). Net profit margin formula is net profit per net sale times 100. Based on the net profit margin of Top Glove Corporation Berhad, the trend going downward until 2020 and upward drastically on 2021. This because in 2000, their net profit is very low. Meanwhile, for Carex Berhad, the trend of net profit margin ratio decreased gradually from 25.91% in 2017 until 0.15% in 2021. This because net profit and net sale of the company decrease every year. Move on to return on equity (ROE). The formula is net income per shareholders equity times 100. The trend of ROE for Top Glove are constant and drop in 2020 and upward drastically in 2021. This because Top Glove generated too much net profit in 2021 lead to outlier. Overall, ROE of Top Glove is good and gain the interest from the investor. For Carex Berhad, the ROE tends to decrease from year to year, which show that the company is in a bad condition to provide a high return to investor. In 2021, ROE for Karax Berhad only 0.05% due to low profit generated by the company.
The next part is market measure ratio. Market measure ratio are to be measured and analyze the stock price, and market prices are contrasted with those of rival and with other data points. This ratio monitor public corporation financial result to help us better comprehend their places in the market. In this ratio, we focus on two main ratio, which are earning per share (EPS) and dividend yield. We move to the first ratio, which is earning per share (EPS). Earning per share or EPS commonly utilized by user of financial account reliable indicator of a company profitability. Let's take a look on first company, Top Glove Corporation Berhad. Above, the calculation demonstrate that during the past 5 years, Top Glove Corporation Berhad has experienced fluctuating trends which are both decreasing and increasing trends. The percentage started to decrease from 2017 with 0.2618, 2018 0.1706, 2019 0.1439, and a sharp drop in 2020 with 0.0690. However, in 2021, it come back with 0.973. It is happened because the company's net income also fluctuated, which from 2017, the net income from around 328 million slightly increased in 2018 and decreased in 2 years after, which are 2019 and 2020. In contrast, there was a sharp increase for net income in 2021, which was around RM 7 billion ringgit, while the number of shares outstanding is increasing over the 5 years. In contrast to Top Glove Corporation Berhad, let's take a look on Karax Berhad. Above, the calculation illustrate that during the past 5 years, Karax Berhad has experienced declining trends over the year. The percentage started to decrease from 2017. Meanwhile, there was a slight increase in 2020 to 0.0035. However, in 2021, it faced a drastic fall to 0.0001. It's happened because the company's net income also faced the same trend with earning per share EPS, which from 2017, the net income is from 28 million dropped to around 303 million in 2019. In contrast, there was a slight increase for net income in 2020, and the number of the net income dropped drastically in 2021 to around 146,000 ringgit, while the number of shares outstanding for the year 2017 to 2020 is remain the same. However, in 2021, there was a little addition to the share. Let's find out about the next ratio, dividend yield. Dividend yield demonstrates how much a firm pays out in dividend annually in relation to the price of its stock. It also shows the correlation between the market price per common share and the dividend per common share. The outcome of the above calculation indicates that Top Glove Corporation Berhad dividend yield also has fluctuated trends over the past 5 years from 0.16 in 2017, dropped to 0.08, 0.05 and 0.04 in 2018, 2019, 2020 respectively, while in 2021 increased to 0.15. Generally, Top Glove Corporation divides their dividend distribution 2 or 3 times, so it will have a different amount of dividend in a year. As a result, when the dividend yield falls in 2018, 2019, 2020, it shows that the stock price are rising. However, in 2021, yield will start to increase. It is true because the market price shows increased price in 2018, 2019 and 2020. Meanwhile, in 2021, the market price will start to decrease to 4 ringgit. In contrast, the outcome of the above calculation indicates that Karax Berhad's dividend yield also has fluctuated trends over the past 5 years. In 2017, the ratio is from 0.58. Then in 2018, it slightly rushed to 0.16, and in 2019, the ratio is at the peak of the percentage over the 5 year, which is 1.83. Meanwhile, in 2020, it come back to decrease to 1.02 and continue to drop to 0.13, 0.93 in 2021. In contrast with Top Glove Corporation Berhad, Karix Berhad distribute their dividend one-time payment only, so it only has a one particular amount of the dividend. As a result, when the dividend yield start to increase from 2017, 2018 and 2019, it shows that the stock price are decreasing. However, in 2021, yield will start to drop because the market price at that time is increasing back. In conclusion, we decided to choose Top Glove Corporation Berhad, having a good financial ratio. The reason is, firstly, in general, we already know that Top Glove Corporation Berhad is a big company and the most popular one compared to Karix Berhad. Secondly, in terms of profitability, Top Glove generates more income than Karix Berhad. It is because Top Glove company use their all asset efficiency to generate more sales and income. They also take advantage due to the COVID-19, which during pandemics, hygiene tools are needed such as gloves to exterminate the virus. Moreover, in terms of debt ratio, even the debt for Karix Berhad is lower than Top Glove. But Top Glove still has the ability to pay their debt using their revenue and income. That's all from our group. Thank you very much.